Hey everybody, it's Chuck Barone. Tuesday, December the 19th, 2023. Another day crazy, man. Actually a little bit quieter, but the optimism reigns supreme. Markets on a roll. I guess everybody's buying into this perfect landing scenario. We're going to get out of this inflation situation without a recession. Markets reacting accordingly. And it just continues today. You see, let's talk about the markets. Before I get rolling on everything, though, let me take a half a second. Welcome everybody to the show. And of course, thank you guys for your support. You guys watching these videos keeps us rolling, man. We appreciate it. All right, so let's look at the markets. As we know, the market's now full of optimism. The markets have been rallying since last week's Fed Open Market Committee meeting ended. Powell's presser really motivating stock buyers. And the rally keeps rolling. Here it is today. The Dow Jones up another 250 points, 251 points, settling 37,557. The NASDAQ up 98 points, breaking through, now above 15,003 on the NASDAQ. The S&P rolling along too, up 27 points today, 4,768. Looks like all these indexes are heading toward new highs every single day. And what's going to stop it? I guess, if Powell himself comes out and says there will be no rate cuts the first quarter, maybe that could slow things down. Other than that, we'll see. The bond market reacting the same way as the stock market, not as exuberantly, but the bond market's still rallying again. But now you got to know how that works, right? When prices go up, yields come down. So the market rallies, yields coming down again. The 10-year falling just 3 basis points today, but now sitting at 3.92%. They were talking about 5% 10-year. It actually briefly went over 5% intraday. The 2-year also falling today just 1 basis point, 4.44% of the 2-year. So these rates continue to come down. And, the Fed, again, yesterday, today, Fed officials out there talking about no rate cuts coming soon. The market's getting way ahead of the Federal Reserve. The bond market buying none of it, stock market either. So we'll see how the Fed's going to manage this. And it'll be interesting in 2024 as we roll into the new year to see when these rate cuts will actually start. Between now and when they actually come, let's just say the first one comes and is planning on they're coming in March, okay? You're still going to get all of December's, all of January's, all of February's data. If there's any glitches in there, it could change the whole plan, the whole outlook of everything. But everybody gambling, betting that those things were not going to happen, apparently. I'm always skeptical. My mind goes to, let's hope for the best, but prepare for the worst. I'm an optimist. I want the markets to rally. I want to make money like everybody else. But nonetheless, you have to be a realist here. And in spite of all the cheeriness, people are not feeling it. Now, we'll see how the spending goes for Christmas this year. That's going to really be a big indicator. They're talking about an incredible amount of money being spent on Christmas this year between the presents and the food and the shopping and the gas and the travel and everything else. Like above $900 billion, something of that effect. Crazy. Dollar today down again, down small, but still 102.15 on the index. Coming down, trickling down now. I think the dollar going to come down, get to that 100 number on the index. And when that happens, you're going to see gold and silver blast off, like I've been saying. Dollar, even as it's coming down, still the strongest currency there is in the world right now, even though it's been diluted and debased and peed on and everything else the government and the Fed are doing to it. So dollar down again today. As a result, you got gold and silver coming up. Gold rallies, $12.80, $2,040.10 for an ounce of gold. Silver up 25 cents, $24.05 for an ounce of silver. Looks like gold getting comfortable above 2,000 an ounce. We're going to look for silver to get above 25 pretty quick here, I'm guessing. And I think metals have, gold and silver especially, have a ways to run as this dollar comes down. Oil today up again, oil rallying, up another $1.11 per barrel. Now sitting at $73.58 for a barrel of West Texas Intermediate. It's been a pretty good couple days in a row for oil, but really not phasing our outlook. We've been telling you guys, oil wants to trade between 70 and 75. So while it's between those two numbers, where it seems to be most comfortable trading, where up, down doesn't really matter. It's in that trough. When the breakouts are what we're going to pay attention to, but these breakouts that we've seen have not lasted very long. Even the last one, which was a big breakout to the upside, with the Saudis and Russia all cutting production, oil rallied up almost to 100 a barrel for a short time, right back down in its trough now. Bitcoin today haven't taken a breather, down $28, 42,358 for Bitcoin, a good solid number, consolidating well above $40,000. There may be some corrections coming and some profit taking here, but looks like this is here to stay, guys. So let's see where we go next with Bitcoin. If Blackstone can get their ETF off, I think Vanguard has one in the makings. If these all come to pass, this is going to seem like a cheap number for Bitcoin. All right, let's talk about news today, stuff you guys need to hear. I haven't really seen much data, just a little bit of stuff trickling out today, but a couple things I want to touch on. First thing I want to talk about is a little bit about rate cuts. The market going crazy, everybody anticipating rate cuts. Oh boy, it's going to be so great. Why? How will that be great? Well, you think the economy, it's already showing 5.2% for the third quarter GDP output gain, right? How much hotter do you think a cut is going to make the economy? You think you're going to now rush out and buy a house because the Fed's cutting a quarter point? Rate cuts are good, don't get me wrong. It'll make the stock market go up. It'll spur some activity in real estate. Car loans will get a little bit cheaper and other loans will be good for consumers. But as great as rate cuts are, prices are never coming down to where they were pre-COVID. And that's what everybody wants. And everybody sees the difference in the price from pre-COVID to today. Actually, here's the numbers. From February 2020 to November 2023, prices have risen 19%, more than 19%. Some a little higher, some a little lower. That's the average number of prices. And that's the sticky part. That's the part that's there. Right? So what was $1 is now $1.19, right? And people noticing this at the supermarket, right? Now the Fed target is to hold inflation to 2% per year. They're not there. They're still above 3%, but that's their target. Now the Fed is not looking for 2% decline in prices. They're not looking for deflation at all, okay? The truth is, if real prices started to fall, that would likely panic the Federal Reserve. They called that deflation. They have, inflation, disinflation, where inflation numbers are coming down, a newly coined word I like. Then you have deflation, right? Deflation is looked at as very negative. It's bad for economic growth because people hesitate to buy today if they feel like the prices are going to be lower next week, right? So that causes production to slow down, and that causes layoffs, and that causes recession, and on the negative stuff goes. That's why Federal Reserve and almost every central bank in the world is pushing for a little bit of inflation. They just want to kind of keep that to 2% a year, right? Now, I'm not some kind of advocate for deflation. I'm not. But bringing prices for the basics that we've all seen go up so fast, food, your power bill, your car insurance, gasoline prices, seeing that stuff come down in price, seeing deflation there, well, that would be pretty welcome, I would think. not only to myself, but to most consumers. It's too bad that the Federal Reserve and the government are never going to allow that to happen. So I tell you guys right now, the prices are never going to go back down to where they were. They're just not. Add in completely off-the-hook, greed-driven multinationals, and prices are only going to go one way. They're going to go up. That's it. Okay? Now, here's the question I have. Everybody clamoring for rate cuts. Don't rate cuts usually come when the economy's stinking? You know, like to kind of either get us out of or prevent recession? Isn't that why the Fed cuts rates? Well, didn't GDP just come at 5.2% for the third quarter? We're going to have a pretty solid GDP growth number for this year, I believe. Second consecutive pretty solid year. You know, what's the Fed's motive for cutting rates? If the economy is still going strong, people are still borrowing money, money's still circulating throughout the economy, and companies are earning money, what's their motive? They want, what, more economic activity? They want to overheat the economy? Is that the plan? I don't know if, you know, an economy like we're in right now, at least the way they're touting this economy, is a great environment for rate cuts. And if they cut rates while the economy is still solid, I think that'll be good or bad for, you know, inflation. I got to believe that more economic activity, more money circulating, more activity would be bad for inflation numbers. So if the fight to keep inflation down is where they're at, I don't really see how they're going to be cutting rates. Now, I've been wrong about the Fed pretty much every step of the way. I really thought they'd be a little more bearish. I thought we'd have another hike this year sometime. We did not get. I don't know. I think that rate cuts are going to make the economy boom. But if we're already booming, I think that, I don't know. I just don't see what the Fed motive for cutting rates is other than Wall Street wants it. Interesting times. Also, I saw just a quick blurb today. Nippon Steel, Japanese steel company, buying up U.S. Steel, the largest U.S. steel producer, historic company, J.P. Morgan, Andrew Carnegie, all of that. Nippon Steel buying U.S. Steel up over $14 billion deal. They're going to have now a giant footprint on steel here in the U.S. I guess that's how you win these trade wars, right? Tariffs on Japanese steel coming in? Okay, let's just buy the biggest steel producer in the U.S. Okay. And I was reading this today, now new car buyers. Remember, I've been complaining about these payments and outrageous prices on cars. Well, now we're getting this new phenomenon. New car buyers having some serious trouble right now. Car owners, especially guys, let's say within the last 3 years, facing big underwater situations where they owe more on the car than the car is worth. Now that happens a lot, really, with a new car, especially when you're maxing out your payments and your loan amounts. As soon as you drive a new car off the lot, it depreciates in value pretty dramatically. But now they're having a big problem with this, with declining values, especially on used cars. Used cars were going up in value. Remember me laughing about that? That's crazy. Well, now that's all coming back down to earth, but people had bought these loans while the prices were out way up high. Everybody got to have a car, right? So now they're, you know, these car loans are outrageous. Car loans now basically tied with student loans for the second biggest debt grouping here in the United States, second only to mortgages. More than $1.6 trillion owed on car payments to cars. $1.6 trillion. Right now, the average car is $6,000 underwater, meaning they owe $6,000 more than the car's worth. Defaults flying, Delinquency is really rising fast, actually sitting at a record level now. So we'll see if this economy turns south, how the default numbers go for cars, because usually they're going to go up. With, you've seen some of these subprime car loans with rates higher than 20%. People doing anything, they have to have a car, right? So anyway, guys, that's it for the day. We'll be back tomorrow. Oh, actually, tomorrow there will be no show. I got a big dinner I got to cook for a whole bunch of people. But we'll be back Thursday. We'll get everything caught up on Thursday. You guys have a great day tomorrow. Enjoy it. And we'll see you guys on Thursday. Until then.